Welcome back, realvacantland.com. This is Luke Smith, and I've got another property for you. This one I'm calling Storage Goes Here land. This isn't the kind of land you want to build a house on. This is the kind of land you want to make money off of to go build your house somewhere else, right? Prices are up on everything all over the place. Inflation's going. We need new ways to pay the bills, you know? So I'm studying these kinds of properties we could put businesses on because I'd like to do this thing myself. I mean, just looking at the numbers. But if you guys want to run with it, that's even easier for me. So let's take a look at this and see if you're the one who wants to run with this property. So we are in Sonora, California. We're in Northern California. I'm asking $300,000 for this property. Luke Smith, phone number, information here. You can go to the link in the description to come back to this website, click on my phone number and ask me questions about it. I've got reports. We hired consultants to draw up all kinds of economics and details of the market analysis and everything on this property to go make it happen. I'm sure somebody can pull this off, make it happen. I just need the can-do attitude builder that's going to put it up, or someone that's going to hire one to go make it happen, right? I made a video about this in the past. I was saying storage, but I've learned more, and I keep learning more. So I'm making a new video. So let's make this. So here's a map. Here's a property. It's a rectangle. We got a little street on this side with utilities and sewer over here. We got a bigger street over there with it's Highway 49, and I'll zoom out some more and show you that one. I just got some new data on this street. It's 14,000 cars a day. I swear I was looking at it before and it was 15,000, but you know, different data sets, different numbers. Maybe they measured it on a different day or different averages. I don't know. Maybe they missed the morning rush hour. So here's the town of Sonora that's right below here. And if we turn a map on, if you know where Sonora, California is, I'll zoom out some more and show you. We're on the north side of town. This is a 49. There's a lot of people that have RVs and boats, and they go to the lakes and the mountains and stuff around the area, and they keep their toys in storage. Storage called around, all kinds of storage around the area. It's basically sold out. The consultants are calling it 98 point something percent capacity. There's like hardly anything left that's not rented out, and so they can just keep walking the price up, and it still happens. So we're in Sonora, California. Here's some lakes I was telling you about, people's boats, and here's Sacramento and the Bay Area, San Francisco, Sacramento property over here. Okay, so that's where we're at. We're on the back side of the valley, not that far from some big dollar metropolises. And so here's Columbia Way is one property, and Highway 49. Okay, so there's a property. You can go look at it, study it, and everything else. I wanted to look at the economics today. There's other videos more about the property. Let's talk about economics. So this thing, it's up for sale. Got this this realtor is Rebecca Ellis, is the one that's on this right now. Her phone number is 209-595-7150. Please give her a call. Say, I want to take a tour. I got questions. She can answer questions, walk you through it, make it happen. She's working on some other storage projects herself and other capacities and stuff too. She knows storage projects and she knows this area. Give her a call. So I pulled up, let's set the basis for this area. The reports I pulled up, or that we hired out, have more in-depth demographics and competitive analysis of the other storage facilities in the area, what's been built, there's nothing in the pipeline that we could find that's coming online. And it's you know, the ones that are there are rented out. So, but today, I want to look at the demographics that I can pull up easily here and compare it to other properties that have demographics and that are already built compared to ours as land. I want to look at the ones that are already built. So if you're going to build this and then turn around and sell it, or what are you going to own after you build this thing? What does it compare to? That's what I want to talk about today. So let's set the stage with our demographics. Within a 1 mile radius, there's like 3,600 people, and there's they make kind of like $53,000, $54,000 a year on average. Within a 3 mile radius, there's 13,600 people, and they make like $53,000, $54,000. And a 5 mile radius, there's 23, maybe 24,000 people, especially after COVID stuff. there's they're making like $55,000. So 54 to 55. I'm just taking notes. 54 to 55, basically kinds of incomes across the board. Now I pulled this up in Crexy. I got my traffic on here. This is 2004 traffic data, so that's pretty old. It's saying 14,000. 2015, further on beyond the property, 13,300. 2015, 15,400. Yeah, so 15-ish. 13, 14, 15,000. Traffic's been going up after COVID. People have been moving out more this direction from the bigger cities. So these are older numbers, but you get the picture traffic-wise. Property is right here, just off the side of the road. Okay, so I went into Crexy. I like this website, Crexy.com. I pay for their fancy stuff, and I get more information. And so I did a search for self-storage because I think this property that we've got, I know it's zoned for self-storage. I talked to the county. They say if you hand in drawings of this property, the storage that you want to build, you need a couple copies and you pay some fees and stuff. They think within 6 months they'll have it all approved. If the plans are good plans, they'll have it all approved and you can start breaking ground. Permits to build and everything within less than 6 months. It seems like a really short timeline from idea to conception in this market. We're right on the outside of town, so we're not in the town zoning, we're in the county zoning, which seems to be lighter and easier. The town zoning doesn't allow, roll-up doors kind of storage like some of these places you can see in the back, self-storage. I think self-storage is cheap, fast, and easy to build, and that's why it's a good tool to make the economics of this property sing. And so that's why I'm looking up self-storage, because the zoning allows it, because the market looks juicy for it, the rental rates are high, and you can make money off of it. So I have self-storage pulled up on here, and I have it sorted by NOI. NOI is net operating income. So we build one of these storage properties, how much can we rent it out for? Like if we're the landlord and we rented the whole thing out to somebody, in our case it'd be a whole bunch of somebody's, but what's the income? And in this case, it's the consultants came up with, it would be year 1 would be renting up, year 2 would be renting up, the end of year 3 after construction and renting out, we would be full based on the market analysis of the area from professional consultants that do this for a living all across the country and know this market really well. They think 24 months lease up. So the rents would be climbing along that way. But then when it tops out, it never really tops out, but like when it's full, then you can start raising rates, right? It's like once people have their stuff in there, they don't take it away. You just every 6 months, you just keep bumping up the rates. You keep going up from there. But okay, so after 24 months of leasing it out, once it's all leased out, I should say, they expect it to be a $206,000 net operating income. And I've got all the breakdowns and detail to share with you if you're a serious buyer on this property. Okay, so $206,000 NOI. Let's keep that in mind. That's after all the bills are paid. NOI is before debt service. This is like before you used a mortgage and you're paying interest and amortizations, because interest and amortizations are up to whoever you are, your name and your cost of capital. And that's very, very fungible depending on who you are. Okay, so that's why we go with NOI. This setup is NOI. So the stuff at the top here, I mean, Tesla storage, 26 million, that's not it. So I'm going down the list and I'm looking at the ones, that have NOI. I'm looking for NOI close to us. Here's a $5 million facility in Wisconsin. Their NOI is going to be higher. Yeah, $362,000. So you get the idea. We go down the list price-wise, and these are sorted by NOI. We're going down the list to find NOIs that fit us. And then by there, we can see what kind of stuff they're building and what kind of prices they're asking for it. And so I came up with this one. This one's been on the market for 7 days. This is in Midland, Michigan. Okay, so this is a different market. It's a different property. but it's got the same kinds of rent that ours could have 2.5 years from, pulling the trigger on this thing. They're coming up with an NOI of $229,000 on this thing. They're asking a cap rate of 5.5%, which comes out to $4.2 million. They're asking $4.2 million. Now, it's not sold yet, but it's only been on the market 7 days, and this is what they're coming up with. These kinds of cap rates are happening in the market. Even lower cap rates are happening in the market, so they'll probably pull it off. And I haven't dug into it to see the particulars or anything, but okay, so 4.2 million for very close to our income. They're 229, we're at 206. It's close, but they've got more. The demographics on this one, 500 people within a mile. This is country land, right? Within 3 miles, they got 4,400 people. We've got like 3 times that. Within 5 miles, they've got 20,000 people. We've got 23,000 people. So we beat them on all the demographics. Oh, they've got nice incomes. Within 5 miles, this is Midland, Michigan. They got Dow Chemical and stuff. They're making some good money. That's $90,000 income. So they got higher incomes than us. Our incomes are like 54 to 55. Okay, so the next one, I found another one. This one is in Union Gap, Washington. So here's West Coast. This storage facility, they've got NOIs of, this is for sale. This has been on the market 167 days. Their NOI is $204,000. So $204,000 versus our 206 futuristic number. Their current 204 is worth more, but I'm painting a picture. If you built something like this on our property, you go sell it on the market like this. They're asking for a pro forma cap rate 9.46%. What the heck are they doing there? That sounds high. I don't know. It's not all leased out yet or something. Oh, cap rate 3.89 versus pro forma cap rate, where they think it could be if you did something. They're asking $5.2 million for that sucker. Oh, they say the 6.5 acres available for expansion. So they think you should go build on a bunch more storage. And then that's why they're getting so much for this one. So this isn't a apples to apples. I'm reading more and learning more. But so they're doing over 200 grand in NOI, and they've got a market. So the incomes in their market's 44,000. Ours is 54 to 55,000. They got 2,000 people within a mile. We got 3,600 people within a mile. They got 39,000 people within 3 miles. We got 13,000. So they've got more people within 3 miles, and they've got 100,000 within 3 miles. We've got 23. They got 4 times more people than us within 5 miles. So they got a good deal more population to draw off of. Similar. Well, our incomes are higher, but they're pulling this off. They're asking for $5 million, which I think is crazy, mainly because they're jittening up the price of the land next door, being able to add on, I think is why they're doing that. But they're really 3.89. If you took this down to like a 5 cap or something, it'd probably be more like $3 million or something instead of the 5. Okay, so the next one, I found another one here. This one is in Bonham, Texas. So these guys have a $215,000 NOI. That's like the annual rent for the year. And occupancy 18%. What are they doing? Oh, pro forma NOI. Okay. So they're offering this on a pro forma. It's not there yet. Like they've got it just started. They just started renting it out. Like ours is a pro forma NOI of 206,000. If you build it and if people come and rent it, like the plans that we have. So they believe that they rent this sucker out, they get it all up and running, and it'll be $215,000. And they're selling it at 7.5% cap rate, pro forma cap rate when it's all rented up. You would be like buying it at 7.5%. They're asking $2.9 million for this thing that's 18% rented out. You got to go do all the renting it out. Okay, so within 1 mile, they've got 427 people. We've got 3,600 people. So we're a lot better in 1 mile with volumes of people. Within 3 miles, we've got 13,600 people. They've got 2,000 people. Within 5 miles, we've got 23,000 people something, and they've got 11,000 people. So we got population like way better than these guys. Incomes, 49,000, 66,000. Ooh. Okay, so the bigger population in the area is 49,000, and we're 54 to 55. The smaller population in the area is 66,000. So maybe they're in a fancier part of town than the whole town is an average. And then the 160, okay, so we've got better incomes for the bigger numbers of people. They've got better incomes for the lower numbers of people, but they're not far off from each other. And these people are asking $2.9 million for this thing before it's fully rented out. It looks like, I think it's built, but it's not fully rented out yet. $2.9 million. So this is, I was crunching numbers and my kinds of math. I was thinking right around the $3 million that this thing's worth when it's totally built out off the numbers that we have off the consultants, and looking at the market and lining up NOI numbers. It seems to be kind of right around those $3 million numbers. So here's another one. NOI, it's falling off the screen, but it says $180,000. So this one is in Waynesville, North Carolina. So we're bouncing all over the country on these, finding comps for you, right? But $180,000 NOI. So this is much lower, not much, but it's close. It's close to the kinds of NOIs we're talking about. So I've got some above, some below, and they're all kind of narrowing in on these $3 million kinds of numbers. These people are asking $2.9 million and for their $180,000 a year kinds of rents. Their cap rate 6.2%. It's an older storage facility, and it's got doors, roll up doors. You can go put your stuff in there. Been on the market for 33 days. Okay, so I could go and look at these things all day and like compare them back and forth. But the point of what I'm trying to say is properties that are built out, like I think this land could be, are trading in the $3 million kind of range. And yeah, you can say, Luke, I don't have good comps from California. The California ones are all sold out. That's a good thing. So if you build this, somebody will buy it, is what I'm trying to say. And these other people are putting them up for sale before they even get rented out. They're just putting pro forma numbers up. So I think it's a short time to get permitted here. I don't know the timeline it takes to build. That's where I need some expertise from a local builder that builds this kind of stuff. I've called some different storage builders in the state of California, and they kind of refer me on to find local contractors that would build this out. And the project's just over my head. I'm a land guy, finding land, looking at the opportunity, and I'm looking for somebody that knows how to build this and make it happen, can be on the ground saying, do this, do that, and pull it off, right? So if you're that guy or gal or that person or that team, this property's for you. We're asking $300,000 for the property. I think the cost of building is the land and the cost of building is like $1.5 million, and trying to get numbers from the consultants and today's current markets and stuff. And then I think once it's built and rented, you sell it for $3 million if the markets stay the way they are. And I think you use bank money to do a lot of that heavy lifting, and it's about inputting the time and keeping the profits and rewards from point A to point B of buying the land, permitting it, building it, renting it out, and delivering it to one of these portfolio buyers who likes to own it long term and just collect the yield off of it. Or like I started the video out as one for you to keep for yourself, for your personal portfolio, to collect the rents on over time. It's good retirement, it's good business, it's something that everyone should own. And we just don't all have the opportunities to do that. So thanks for listening. Thanks for watching. See you in the next one. Bye.